Hey guys, welcome back to BK Trading Academy. I'm just going to get right to the case. How to transition from Forex to stock market, guys. If you've been following us for a while, I'm pretty sure you have a good understanding of the Forex market. You understand that there are two currencies you're trading. It's called a currency pair. There is the base and the quote and all that good stuff. Now with the stock market, it's a bit different. You may not even understand how to start and where to start. How much is it a pip? For example, do we even use the word pip or tick or whatever? So I'm going to kind of clear up some of those things and get your feet wet just a little bit. I'll make sure I make more videos of these if this is beneficial for you guys. So let's go ahead and hop into some pros and cons, how to open a broker account, which broker account that we suggest, and so on and so forth. So let's get right into it. So one of the pros for trading the stock market is that you have diversity. You literally have thousands of stocks that you can actually trade, right? So before we get into that, what is buying a stock? When you buy a stock, you're actually buying a piece of that company. You're part owner, right? Congratulations. If you buy a piece of Apple stock or Microsoft or Costco or Coca-Cola or whatever, you're a part owner. So you can actually tell your friends, I own Coca-Cola, right? So that's pretty much what it is. And it's exciting to understand just that basic, right? So, but when you're trading currency, you're actually trading the value of that currency. We have tons of videos of that if you don't quite understand that yet. But when you're buying a stock, you're part owner. So one of the pros is that there are thousands of stocks. You have diversity. You can be part owner of Disney, of Coca-Cola, of Pepsi, of Costco, of a whole bunch of other companies when you're actually buying a stock. So that is a pro, is that there is diversity. There are tons and tons of stocks that you can actually trade. Now with the Forex market, there are just a few major pairs and some minor pairs, and that may be beneficial for you if you don't want to get sidetracked and distracted by a whole bunch of other things to trade. So there's some benefits, some pros and cons between the two, but that's a pro for me in regards to the stock market. So pro number two for the stock market is that there's long-term growth potential, right? When a company goes IPO, which means initial public offering, their whole goal is to grow. So imagine when Apple first went IPO and you bought a stock then, you would be sitting pretty nice, right? Their whole goal is to grow. And so in order for them to even become public, there has to be a lot of investors and a lot of people saying, you know what, I think it's worth it. Your history shows that it's worth it. You've been doing really good. You've been trending up. Let's go ahead and make you public so that now we can get the world into it. So that's the whole point of IPO, is that long-term growth. Is really, really rare that a company actually goes bankrupt compared to all of the thousands of stocks and companies that are out there in the stock market. So typically, and that I'm going to talk about this a little later, when you're entering the stock market, whether you're day trading or investing, you typically want to buy because you're expecting long-term growth. But if you're day trading, you may see opportunities where you may not want to buy. You want to wait for a pullback, wait for price to go on sale before you buy that stock. We'll talk a little bit more about that in just a moment. So let's look at some other pros and cons. So one of the cons with the stock market, if you're looking to day trade, is that the stock market only opens from 9:30 Eastern Standard Time to about 4 o'clock Eastern Standard Time. So if you are a full-time worker and you work a 9 to 5, it's going to be impossible for you to look at that chart unless you have that flexibility. So in that case, you may want to invest long-term rather than day trading, like we typically do with the Forex market. Now, you can long-term trade the Forex market as well, but there are a lot of videos that we have on YouTube and even with our students in our academy in which we day trade or even swing trade or even scalp. So that may be impossible for you in the stock market if you work a typical 9 to 5 job. And it's also bad for you too, because when the stock market open around 9:30, that's when the most volatility happens, right? We see when stocks are rising fast or maybe dropping fast or, a little bit in between. But if you can't do that and you're at work, that's going to be impossible for you to day trade. So long-term trading with the stock market may be beneficial for you in that case. Now, another pro for the stock market is that a lot of brokers are now becoming zero commission. They're not charging commission. A lot of good brokers as well. So a lot of times people will say you get what you pay for. In this case, that's not the case because a lot of competition is out. And it started with Robinhood. Robinhood was one of the brokers that said, hey, zero commission. And because of that, and a lot of people were getting in the market, a lot of brokers had followed suit and now have zero commission. Now, there are some brokers who still charge commission, but it's completely up to you. But that is definitely a pro. With the Forex market, there are a lot of brokers who charge commission. It's because it's a little easier to trade. You don't really need as much money to trade. You're working with a lot of leverage, in which I'm going to talk about. Now, another key difference between the Forex market and the stock market is that if you short, or in other words, if you sell the stock market, it can be a lot riskier, right? You need a completely different account when you're selling called a margin account. And we'll talk about that in a moment. before you actually can sell. And then that comes with things as well, right? So you can actually sell a stock, but if it continue to rise, the sky's the limit. If it sells, it can only hit zero, right? So if price goes up and you're in a short sale, you can actually go negative. But if you're in a buy and price goes against you, the most you will lose is your initial deposit. So that is one of the dangerous things of stocks as well. But it's rare that a company goes to zero unless they're going bankrupt without you even knowing that. So sticking with the Fortune 500 companies typically is safe, or finding a new company that just went public in which price can only really go up. So here's a key concept that you must understand with stocks and Forex. When you sell the Forex market, you're actually really buying the other currency, right? You're never really selling. So if you're looking at Euro USD and you're looking to sell, you're actually buying the United States dollar, right? You're not actually selling anything, you're actually buying. With the stock market, you're literally selling off a stock. So how can you sell something that you really don't have when you're starting off with? So let's say you go ahead and you sell, right? That's why you actually need to open that margin account, because your broker is lending you per se money to sell, and then they make that back up on the other end when you profit from that sale. Okay, so you can't sell something that you really don't have when you're first entering that market. So that's a key concept that you have to understand between the Forex market and the stock market when you sell, which is why it's a little bit more riskier when you sell the stock market than when you sell the Forex market. So here are some things that you need to have and understand before you pick a broker. All right. Number one, commission. Do your broker charge commission? This is something that may be important to you. It may not be important to you. So that's one thing that you want to look for is, do your broker charge commission? Number two, does your broker charge a minimum deposit? That can be something important to you. It may not be important to you. Number three, the ease of use of platform. When they provide you with your platform, is it user friendly? You want to be able to navigate. You want to be able to hit the buy button fast, the sell button fast. You want to be able to get out of a trade if you feel like a trade isn't good. You want to be able to understand how to take profit or your stop loss. The ease of the platform is very, very important. And I'm going to go ahead and suggest one for you in just a moment. Number four, slippage. Slippage is pretty much the difference between the price that you were looking for versus the price that your broker put you in, right? So that's how they actually make money. If they're not getting commission from you, they make money from your buys and from your sells. So it's sometimes hard to determine, but in order to determine the slippage, I suggest that you paper trade before you actually go live. And we use the term paper trade when you are trading the stock market, which in other words is demo account or trading fake money like we use in the Forex market. So you want to paper trade before you actually go live. And then finally, number five, the execution speed. If you want to hit buy, you don't want to be sitting there waiting in the queue for a long time. You want to make sure that you have proper, sufficient execution speed. That kind of ties in with number three, the ease of use of your platform as well. So you want to make sure your execution speed is on point. Oh, and I want to also throw this in, number six, you want to make sure that you have support from your broker. 24/7 support if you can possibly do that. Live support. So if you need to reach out and you need to exit a trade or something's going wrong, or if you're having some problems, then you want to make sure that your broker is available to you 24/7, because you can be trading anywhere around the world. You just want to make sure that they're available 24/7. So guys, that being said, I recommend Webull. They have no minimum deposits, and then they also have 24/7 live support. That's really, really huge, guys. So that's something that we recommend. And we're going to talk about the two different accounts that they have in order to trade the stock market. So as I mentioned before, you have a cash account or a margin account. A cash account is you put in the amount of money that you want to put in, and that's what you're trading. It's a 1-to-1 ratio. Okay. You're not trading the broker's money. You're not borrowing any leverage or anything like that. Now with the margin account, it's actually borrowing the money from the broker. In other words, you're actually using leverage as well, and it gives you more buying power. The only thing with that is if you have less than $25,000 in your account, you're going to be subject to a PDT rule. The PDT rule only allows you to put in 3 trades within 5 business days. So if you see some good opportunities to enter a trade and you're on your 3rd trade, then you're going to have to wait until 5 business days is over in order for you to do that. And you have to understand why, because when you're borrowing leverage from your broker, it's a little bit riskier. So that's why they want you to have more than $25,000 in your account in order to avoid that PDT rule. Now, if you have your cash account, you don't have to deal with the PDT rule, but you do have to deal with something called settlement time. That simply means that if you short with your cash account, you're going to have to wait at least 2 days in order to have buying power again. So if you short sell your stock with your cash account, you cannot buy or do anything within 2 days after. So you can see some of the differences between trading the Forex market and the stock market. There are different rules in place and different things that you need. Now, typically, the whole trading system is the same. You still have your support, your resistance zones. You still use your RSI or your MACD or your other favorite indicators to help you trade while using those as confluences. But there are some major key differences that typically a lot of us aren't taught, right? So we're trading the Forex market because it's easier to get in. You can trade and use leverage from your brokers. And you can handle a lot more money. So in other words, you don't have to use one-on-one leverage when you're trading the Forex market. That simply means if I had $1,000, I wouldn't be able to trade more than 10 cents a pip. Now, if you don't quite understand Forex leverage, I'm going to put it right here above me so that you can actually click on it later and hear more about that. I put it in an animation form so that you can understand leverage in its simplest terms. It's the easiest way to understand leverage that I've ever seen on YouTube or anywhere else, not just because I did it myself, but it's because it's true. Leverage is a hard topic to understand, and therefore it's a hard topic to teach. But I put it in animation form so that you can understand it, that anyone can really understand it. So be sure to click on that and come back to it later. Now, guys, if you haven't got anything else from this video, just remember this, that stocks are typically made to buy. So if you're going to use price action, for example, in your analysis, and you see that price is at a resistance level, you do not want to buy, right? You typically don't want to buy. Now, can you short it to the support level? Absolutely. But remember all of the risks that I mentioned earlier, the account size that you need, or you can't buy for 2 days and all that stuff that we talked about. You want to think about it. So most people don't typically short sell a stock. So you want to make sure that that stock goes on sale at a support level and some other factors that we'll go in another video before you actually buy. So typically, like I said, companies are in the stock market for the long-term goal, which is why our 401ks and other things are in the stock market for long-term growth. That's one of the only markets out there that's designed for long-term growth. When you're trading the Forex market, you may hit a growth and a peak, and then it'll stop and go all the way back down to the bottom in which it hasn't been in like years, right? So you're going to have these huge long trends and huge short trends. And with the stock market, if you go all the way to the beginning, it's just going to be going up. So that's why with the stock market, typically you want to buy, but you want to make sure you don't buy at a resistance level or at a price that doesn't make sense. So guys, back to paper trading. Before you even paper trade or while you're paper trading, you want to make sure you get into a good educational system. You don't want to just go ahead and start buying stocks and applying this through your demo trade and have no clue what you're doing, guys. And then if you do have an education with Forex, you want to make sure that you still understand how to mark up your charts, because it's a little bit different, right? We're dealing with currency, the other one we're dealing with companies. So it's a little bit different. So you don't want to look at the higher time frame and say price is going to come all the way back down to the bottom and before I buy, when stocks typically go up in nature. So you want to understand and you want to make sure you get the right education before you even open a live account. Now, you may be tempted to open a live account and put some money in there and then say, you know what, I'm going to go ahead and paper trade first, but that's actually teasing you, right? When you're paper trading and then you have a live account on this side here, you may be tempted to go in that live account and completely blow your account, especially if you don't have the proper risk management strategy in place. So I suggest to paper trade before you even open a live account with real money, master that, get that education going, then put money in a real account and start trading that when you feel comfortable. Make sure that you journal, right? A lot of traders don't talk about journaling, meaning that every single time you enter a trade, take a snapshot of it. Why you bought or sold that stock, even Forex for that matter. What is your rule? Did you enter your trade with that strategy that you use all the time and didn't waver from it? Did anything look different? So this is what you're journaling every single time, guys. This is a professional. You are a professional trader. This is not a hobby. And those who treat it like a hobby will get hobby results, right? So that's one key advice that I want you guys to take. So guys, next video, we're going to go ahead and look at the Webull platform and get familiarized with that. We're going to start making more of these videos here and there about stocks because we understand that the demand for learning stocks is really, really high. And so we want to make sure that we're there for you in order to do that, especially someone who knows how to transition from the Forex market to the stock market. You want someone to identify with you, especially if you're trying to transition from the Forex market to the stock market. Guys, please like this video if you really did like it, if you understood it, and like it if you want more of this content. Drop a comment in the comment section if you want us to start making more videos about the stock market and how to get started, if it's beneficial for you guys. Guys, don't forget, if you want a quality education in Forex, we have a lifetime membership now. So no more monthly subscriptions. The website is in the comment, and feel free to join our free Telegram for free trade ideas and even motivation, because we all need motivation every once in a while. I will see you in the next video.